In recent trading sessions, the US markets have been on a roller coaster ride, reacting sharply to the latest inflation data and heightened expectations of a Federal Reserve rate cut. Let's dive into the key developments shaping investor sentiment today. The Consumer Price Index, CPI, data released for June 2024 showed a surprising cooling in inflation pressures, marking a significant shift from previous months. This development has been largely attributed to easing price pressures in sectors such as energy and housing. Economists and market analysts have interpreted this as a potential signal that inflation may be nearing a peak, which could prompt the Federal Reserve to consider a more accommodative monetary policy stance. In response to these inflation figures, major US indices witnessed varied movements. The Dow Jones Industrial Average and S&P 500 experienced moderate declines as investors digested the implications of subdued inflation on future interest rate decisions. On the other hand, the Nasdaq Composite, which is particularly sensitive to interest rate expectations, saw increased volatility but managed to hold relatively steady amidst the broader market fluctuations. Among individual stocks, tech giants like Tesla, Nvidia, and Apple were in focus. Tesla's shares showed resilience, buoyed by ongoing optimism about its growth prospects in the electric vehicle market despite broader market uncertainties. Nvidia, a leader in graphics processing units, also held firm, supported by expectations of continued strong demand in its core gaming and data center segments. Apple, however, faced some selling pressure amid concerns over potential supply chain disruptions and softer demand in key markets. Small-cap stocks, as represented by the Russell 2000 index, outperformed their large-cap counterparts. This divergence underscored investors' preference for domestically focused companies that are less exposed to global economic uncertainties and potential trade tensions. Looking ahead, market participants are closely monitoring upcoming Federal Reserve meetings for signals on the direction of monetary policy. The possibility of a rate cut in the near term remains a key point of interest, with market expectations fluctuating in response to evolving economic data and geopolitical developments. So, today's market movements reflect a delicate balance between optimism over easing inflationary pressures and caution ahead of potential Federal Reserve actions. The interplay between economic data releases, corporate earnings reports, and central bank policies will continue to drive market sentiment in the coming weeks.